Good morning, everybody, and welcome to the Options Trading for Income Weekly Update for February 16th, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And please note that any trades or information in this presentation is hypothetical computer simulated trades and or results, and the results are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, please come on over and visit our website, check out our programs. We've got the M3, the Bearish Butterfly, the Rock, the M21, and our one-on-one coaching programs. Become part of our inner circle by joining our mailing list and get your free report, The 7 Secrets to Becoming a Successful Trader. Also, stay tuned for our programs currently under development. We have the super simple spread trades coming out in April 2015, and we have advanced position management live May 18th and 19th in Manchester, New Hampshire. So if you'd like to join us here, that would be great. And then we have our other stuff coming out later. In the schedule, the approximate schedule dates are there. However, those ones are subject to change. The advanced position management and the SSS will be out on those dates. Okay, so let's take a look at what's going on in the markets here. What I was thinking last week is the Russell might come up to the 1220 area, and this would kind of hold as resistance. What we did is we set all-time highs in both the SPX and the Russell on Friday, but it was just barely. It was on low volume, and I wouldn't put a whole lot of meaning in that. I mean, like I said, we just kind of eked up to new highs. So that being the case, if we look at the NASDAQ's a different story, though. The NASDAQ did decisively break out to new highs on Friday, which is a concerning and would kind of imply that that this is going to be going higher. If you look at the Dow didn't quite reach all-time highs, and being this close to all-time highs, very likely going to go there. So that being the case, we're very, very likely to continue higher, at least until the Dow comes up and tags this 18.1 area. From there, it's going to be kind of anybody's guess where we go. But generally, what I would do is I would be watching out for the Dow. If we get a decisive breakout and a Dow to newer highs, Russell's very likely going at 1245 before it rolls over. So this is the index here. At this point, I'd be watching for the next breakout and for the next indication that the general market is going to be significantly higher. While we're looking at this, we should be keeping in mind that the NASDAQ all-time highs are coming up. So if we pull out to a 20-year chart on a NASDAQ, we're up here at around 4,800. So that's an interesting level, especially considering if we look at our price targets for the Russell from our 2008 crash, and we look at our price targets for the Dow and the SPX, we're going to be running into those areas as well. And that kind of sets us up for the perfect storm for a really, really large bearish move. So I'm going to be watching how we come into those levels. Again, it's about 14.8, another 500 points in the NASDAQ. Russell's going to be in the 1350 to 1400 area where that's going to be, and I don't have the exact numbers down for the SPX in my head, but I know we're getting into those areas as well. So that's going to be concerning on as far as and time-wise, we're due for some sort of a major down move as well. So that's going to be a concerning area that we're going to have to start being a little bit more careful to the downside with. But for now, everything is, I'm mildly bullish for the time being, and short term, I'm still thinking the market's going up. So that's what we have for the markets. If we take a look at what's going on with the positions, we have our V Condor, which is essentially had no adjustments. We're just waiting for this to expire. If we take a look at where we are relative to our graph, this is what our current position looks like here. If you remember, we just barely got kicked out of some of these puts before the market reversed, so we'd be doing a little bit better had we not had to do that. But as of right now, we're just expecting this to expire at a profit of about 46.69, which is actually better than normal for a V Condor. So I'd be happy with those results there. If you remember, our bearish butterfly for the month was already closed quite some time ago. The February M3 trade, let's just shoot back to Monday on that one. And we'll take a look at the T-log. This did have, let me switch to the February M3. So I don't think there were any adjustments on Monday. No, there was nothing on Monday. So as of the last time we met, we were here at the 1160 butterflies, and we had 10, 1160, 1180 verticals on. Tuesday with the up move, we ended up doing 10 verticals here of the 1180, 1190s. We rolled our shorts essentially up to this 1190 area, and this brings us to this because we were over our maximum delta at the edge of our tent. It brought us down to about 55, which is fine. This is what the position looked like there. If we take a look, let's see, the next move we made here was actually on Wednesday, where I rolled out 5 1190 1200s, again to deal with a maximum delta problem. That put us into this position here. If you take a look at our analyzed graph, we're just kind of continually straightening out our delta as time goes by because the market's not backing off. Then on Thursday, we essentially had the same thing. Let me go Thursday. I'll go before the adjustment on Thursday. So here we are on Thursday. We're at minus 77 delta. We are clearly outside the tent. I believe we had a positive Vega issue too. So I just came in and rolled 5 more of these 1190s to 1200, and that put us negative Vega. It flattened our delta maybe even a little bit more than I'd like it, but it put us into this position here on Thursday. I'm just going to back this graph out so we can see it a little better. And this is what our position looks like coming into Thursday. So you can see we're very close to expiration. We're still outside the tent, but we're still able to hold our Greeks fairly well. And we're well positioned here. And as a matter of fact, on Friday, nothing was really needed on Friday. So if we shoot up to Friday, we have this position here, no adjustments. We're actually positive Vega. So actually, I should have made an adjustment on Friday. I did not. So we'll have to come in here on Tuesday and straighten this out. So here is this position. If I'm going to make an adjustment, unless the market really pulls back hard on Friday, if I'm going to make an adjustment, this would require, in basic M3, this would require a roll-up. So I'd just be rolling up to 1230 here. So we'd go to here, right, do something like, that's going to put us at 1230 is going to put us at 1280 for our shorts. Almost not even worth going to that level for the short strikes because it doesn't really give us any credit, assuming the market doesn't back off at all. But anyway, let's just follow the guidelines. This is where we start talking about the more advanced M3 type of stuff because, like I said, there's no point in selling the 1180s, so I might not actually want to do that. But let me just show you a roll-up. And here we would probably want to, let me just analyze a trade. Here we'd probably want to put our short strike somewhere around here. Actually, I wouldn't do this. Oh, and then we need, yeah, so we'd have to go all the way. We would actually literally have to roll up the longs a little bit longer to actually control our delta here, or start taking out some of these, let's see, +1. Right, this would put us, actually this might be okay. This would actually be okay because we're inside the 10. I don't necessarily like this position though because the gamma trend is not good. So we'd actually have to come up a little bit higher. What we'd actually probably want to do is this, +10. Right, this would put us at a better number here. So this, again, we still have a Vega issue. The issue here is we're not getting enough we're getting close to expiration, and they're not allowing us enough credit for our downside moves here. So we'd actually literally have to come up to this area probably to fix it. All right, this is a market-driven dynamic right now. This also might be a position that I don't necessarily want to go in, but this would be acceptable because I've corrected my my Vega numbers. I have some downside room, and if the market continues up, we could fight it from there. So that would be probably the best position that you could go in to maintain a safe level. Reality is, if I had to go into this position, I may want to consider closing the trade because I start to put myself at too much risk of a reversal. We're going to follow the rules, though. So, Monday we're just going to stay in this and see if we can get a little bit higher. But this is probably the adjustment we're looking at on Monday. Unless, of course, the market goes higher, that's going to allow us to do something else. Or if the market comes down, that'll allow us to do something else. But right now, at this current price on Friday, that's what we're looking at. So let me take a look at some questions here that I have. So on an M3 trade, do I automatically adjust when the Vega goes positive or even by a small number? I mean, typically, if I'm far from expiration, I'm not really worried about a positive Vega number the day it happens. But yeah, typically that is an adjustment point, and I do want to get to that relatively soon. So, if like this trade here, the first day it was Friday, positive Vega. If I was 30 days to expiration, I wouldn't even be remotely concerned about that. I am a bit concerned about it. I'm a bit concerned about it because we're close to expiration and that T-plus airline is going to collapse really fast. So realistically, I probably should have dealt with that on Friday. But again, not the end of the world that it ran an extra day, even at this point. All right, would I look at the February M3 intraday during expiration week or wait till the end of the day? Generally, I'm going to wait till the end of the day because I have plenty of room here. So if you look at the existing position as of Thursday, so we'll take a look at this on Thursday. Apparently, I didn't even look at this on Friday, so let me just clear this. If I'm taking a look at my existing position on Thursday, realistically, I don't have a need to look at this intraday. The market would have to go down really 50 points for me to really have a concern of taking a major loss on the downside, even more than that. So not a problem, and I don't have a problem on the upside. So as long as I'm positioned here, there's really no issue. It's if I come into expiration week and I decide to battle it out under the tent. This is where a lot of people tend to get into trouble. It is where the money is, but it's outside M3 concept when you really think about it. And the concept being no risk to the upside, no or little risk to the upside, and having plenty of downside room. We start getting into here. I mean, we can do that, but we're really battling outside the concept of the M3 at that point. The M3, you want to keep your position in here. And, that's when people get into trouble and take larger losses. So at that point, yes, if I was to choose to do that, then I would choose to look at this intraday. Typically, if I'm in an M3 concept, I won't, except for expiration day. Because expiration day, this line is going to collapse so fast, and I'm typically at this edge of the tent. I kind of have to watch my upside expiration day. So that's when I'm going to do that. Other than that, I'll leave it alone. I have positive gamma. How could that be bad? I have positive gamma is bad because Vega is positive on Friday. The market stops. That T-plus airline is going to collapse on me. So, in other words, I'm looking at my Greeks, but I also know that this here is going to basically free fall if the market stops. So I don't necessarily want to be there. Yeah, I'm in a really good position right now for a very large move. If we happen to open up on Tuesday and we have a 20 or 30 point down move or a 20 or 30 point up move, I'm perfectly fine, but I don't want to hold this position here. All right, so that's what I have for questions for now. So I was also asked to show the T-log of the February M3, so let's just do a quick review of the total T-log here. And we see we essentially started here at the 1180 levels, and we had to roll back, and now it looks like we may have to roll up. So that is the T-log for that. All right, let's take a look at our next trade. The February rock trade. Let's go back to Monday on that trade. This ended up, again, if you remember, I was a little nervous going into the rock position here, but a lot of times it works out fairly well. So we go into it anyway. Last time we went over to the rock position, the market backed off hard, and we ended up back into an M3 position, which was fine. We still made out with a reasonable profit for the month. It was just that it was a little bit problematic or a lot of extra moves. This month here is one of those months where you pay for those extra moves, or the hassle that you put up with the month before. So coming into Monday on the rock trade, we had looked like this position. We were in this position here. So we're up about $3,900. We're a positive 59 delta by the end of the day. Right, really nice looking rock trade. Essentially, this thing did nothing but did better. And let's see, by Thursday, we simply closed the position out. So let me just go to 1,500 before close. Remember, we have a profit target in rock position of 20%. We were at about almost 400 delta, which was way over our adjustment point by the end of the day on Thursday. And I wasn't looking at this intraday, and I wasn't adding to the position. I probably could have done a little bit better here, but just been a busy bee here and haven't been able to do that. And this is what the position actually looked like coming into the close. So this ended up being closed out at slightly over its 20% profit target. I think it was like 20.1%. And that makes for another nice rock trade. So rock trade, I think last month was close to 10%. This month is 20%. Over the 2 months, we've had a 30% gain. So that worked out really nice here. And if we take a look at, I'll show you the T-log on that too. Yeah, that's fine. Here's this position here. Again, we started this 30 days to expiration at the 1140 butterflies. We got outrun. We swapped into a rock position, and that turned out quite nicely. So, and we were even a little bit cautious with going into the rock position. We went a little bit further back than normal coming into that, which I pretty much knew the strikes I wanted. I wanted to make sure that we could go to 1220 without having too much trouble, but I was also kept in mind that we're at a resistance point and we may have a really harsh down move. So. And again, this is a perfect example of 2 months doing the exact same thing. 1 month, hey, it didn't work out. The market backed off. The other month, it works out fine. So you got to follow your plan. You can't, be changing your plan every month because it didn't work out 1 month, or it would have worked out better if you'd done something else. You want to continue to, to trade your plan. So anyway, that was the rock trade. Last trade for, let's see, that's it for February. Let's take a look at the bearish butterfly for March. So if we go to Monday, this is what we look like here. Whoops. Here's what we look like for Monday on the bearish butterfly. We were 2/3 entered. Looks perfectly fine. If we go to Friday, on Friday, I end up hitting the add point, which was 1220, and I added our 1200 butterflies. So now we're fully scaled in 3/3. We are currently down about $2,000. If we take a look at our T-log, this is what we look like here. Now, I did have a borderline delta theta ratio problem. If you figure out your delta theta ratio here, it's just about 1.5 to 1. When I looked at my delta theta ratio when it was time to add, it was just about 1.5 to 1. It was just about at a roll level where we'd put ourselves in a where we take this 1160 butterfly up to 1220. So I chose this to leave it alone. If the market continues up or doesn't back off on Tuesday, then we're going to roll this to the at the money or 1220s, and then we have another roll point technically at 1230. So that's what we're looking at for the bearish butterfly. I'm sorry, I'm just reading some questions here, or just comments. All right, so no, now we're all set there. We have nothing new. Okay, so here is the analyzed graph for what we have now. Again, we back off. We hit profit target very, very easily here if we get a failure of that breakout that we had on Friday. Very likely, though, that we're going to end up rolling this to 1220, which is not going to, it's not going to look as good here to the downside. But of course, it'll help us if we continue to grind up. But that's the bearish butterfly for March. We have a March M3. Let's take a look at that. The March M3 position on Monday looked like this here. We're a little heavy on butterflies because the volatility was high when we went in. We have 13 butterflies here. We have 10-20 call. By Friday, we were running into an issue with something. Let me see what that issue was. Yeah, I'm sorry. This happened on Thursday. So Thursday, we were running up with an issue of, I believe, negative delta outside the tent. Let me just verify that. Yeah, we have over 50 delta outside the tent here, so we were dealing with a negative delta issue outside the tent, and we went ahead and did 7 1160, 1170 verticals just to bring our delta down under minus 50, put us in a position like this, and we had no needed adjustments for Friday. So as of Friday, we have an unknown profit and loss because we lost our data here. We have a profit and loss of about 861, and a position looks like this. If this continues to go up, we will be rolling it. So it's looking good. But if, so far so good. This, of course, if this backs off, that'll be even better. But we're essentially due for a roll up with any kind of a continued move up from here. Realistically, by guidelines, we could have rolled up because we're 2 points past the long. But if I can hold my Vega negative, usually I don't have a problem holding it for another day. And again, that goes with the other question. You know, do you need to do a roll up the day it hits positive Vega? No, not necessarily. Do I need to do a roll up the day it goes over 1220? No, I don't need to do it. I don't need to do that either. It's a very dynamic and flexible trade. You do want to do the roll up if you're positive Vega, or you do want to do the move eventually. But I don't have to do it today. I can do it tomorrow. So anyway, that'll be the same thing here. If the market stays up over 1220 for a day or two, particularly if I run into some sort of a Vega issue, which I probably will, at that point we're going to do a roll up, and that was the M3. If we take a look at our last trade here, which is a March V Condor, we did not have any adjustments for that, so we'll just kind of switch over to there. And this is our current position here. So it's so wide I can't fit everything on the analyzed chart at the same time. But that is essentially what we have for the position there. If we take a look at our analyzed graph, oops, okay, so profit and loss is wrong. Again, we're having trouble with option view this month, dropping off the bottom strikes. So let me go back about 10 days, and it'll bring it back in, and I'll bring it forward. Okay, so it's back there now. Let's go back to Friday. It should hold it there now that it sees it. Yep. Okay, this is more like it. We're up $919, and the position actually looks like this. So again, this is a decent looking V trade. Everything is going fine. My expectations of the market to creep up and to do our roll in the March position and to do M3 trade and to do our roll in the March bearish butterfly. We're due to enter the rock trade on Wednesday, and that'll be done. And of course, we have the expiration of the options expiration this week, which means the V Condor is probably going to expire uneventful. The M3 trade, I'm going to look at a roll-up. If a roll-up is going to be too problematic, I will just close the trade. So it depends on where the market goes from here. But those are our plans for the week. If there are no further questions, which it doesn't look like there are, I hope everybody has an awesome week. Oh, before I go, too, next week there will be no trade update on Monday. There's going to be no webinar. I'll try to put out some sort of an update on Thursday night or Friday morning, which probably won't include any moves on Friday. I'm going to be away next week, so that's not going to be around. Also, the SMB update for today has been moved to tomorrow because of the holiday, and that's going to happen tomorrow at 10 o'clock. So I guess that's it. So I hope everybody has an awesome week, and we'll talk to you soon.